We're standing by to take you live to a news conference with the Treasurer, Jim Chalmers. That's going to happen in Canberra in the next 10 minutes after the Reserve Bank has raised interest rates by another 0.25%, taking the cash rate to 3.85%. For his analysis, let's bring in Warren Hogan, his economic advisor at Judo Bank, a regular on this program. And Warren, you've been saying for a long time now the RBA needs to move, and if it's going to raise rates, do it now. And it looks like they've done that. So you would think this is a good move today.
But yeah, hi Kieran. Yeah, it certainly is a good move. The more we do early, the less we do later, and of course, the less chance there is that rates have to get to a really unpalatable level, which I think is something over 5%, which of course you're seeing in other economies like New Zealand and the United States right now. So they move early and they give us the best chance we have of keeping the peak in the rate cycle to under 5%. I still think they've got a couple more before all is said and done, but maybe not till later in the year. I think we're going to get a bit of a reprieve, but I think today was a good move and comes on the back of a full forecast revision, which they'll release on Friday with their quarterly statement on monetary policy. But it clearly involved some, unsettling outcomes in that inflation report we just got, particularly around domestic inflation. And of course, I think the population numbers that we now know of in the last couple of months are leading to a much stronger economy than that they'd like to see, quite frankly.
So rates, a shock to the expectations, market expectations, but also a sign that there could well be more to come, Warren.
Yeah, well, their guidance paragraph, the last paragraph of their statement, hardly changed. And it said we may have to do some further tightening in order to get inflation back to target. And that's essentially what they've been saying for months now. They said it last month, even though they paused. So I don't think they themselves are confident that this is the end of it. But, they're just now in a stage where they're reacting to the information as it comes to play, how the economy is evolving. I don't think we're going to get back-to-back moves, not unless we get something startling in the next 4 weeks. I think they probably can hold off for a little while now. But the market, as you said, was surprised and was actually pricing the next move in rates to be down, and many economists agreed with the market. I think there needs to be a fundamental reassessment among many of our economists and, of course, our domestic financial markets about the interest rate outlook, and that'll create a bit of volatility. And I'm sure it's happening right now as we speak.